Okay, everyone, thank you for being here. Christina, I will do introductions. We'll have Sophia Liebman from Senator Allen say a word, Allen's office say a word, and then I'll hand it to you. If you can introduce the two guests that you were kind enough to bring to the call, we will go from there. And then we'll have Daniel Fogelson, who's a Palisadian, go last. I know he's got a little bit that he can share with us from the perspective of a Palisadian. And then we'll go from there, if that's okay. And we'll be recording the call. Hopefully nobody minds that. So we'll be recording the call and making most of it available to the community after we sort of recap the call. So thank you all for convening. This is one second, let me tell the room that we're getting. Okay, so welcome everyone to the fourth of a series of 4 insurance town halls. This started many months ago, I want to say in July, with the help of the office of Senator Ben Allen and also Christina Oakes from Venbrook Insurance Services. We promised a series of 4. We started with a review of legislative through lines, both past and present, and then looking ahead. So we brought people up from Sacramento to talk about what insurance legislation looks like. We talked about the legislation that impacted us then at the time, ostensibly through the fire recovery when lots weren't even cleared yet. We talked about what insurance legislation should look like going forward as we begin to rebuild. And now we're definitely in the stage where we're talking about how, as a community, Pacific Palisades can impact state legislation around insurance looking ahead, and how we do risk assessment. So our first meeting was around legislation. Our second meeting was about rebuilding in a resilient way. So we brought IBHS and we brought the Passive House Network along with Mercury Insurance, and we had a conversation about what it looks like to actually build a resilient and insurable home. And some good information was exchanged at that meeting. Our third of the series of 4 was about community insurability. That is a concept that definitely has gained in popularity here in Pacific Palisades. We've talked about the fact that being insurable isn't just at an individual home level, but at a community level. So we now talk about resilient blocks, streets, communities, and we think that that's the path forward for insurability. And this, which is our fourth in our series of 4, we are talking about risk assessment. So Venbrook was kind enough to bring us a couple of people who can talk about how the insurance industry assesses risk. We've got AAA Insurance, which is actually an insurer here in Pacific Palisades. So we're eager to hear from them. And then I also brought a Palisadian I've had the good fortune of meeting here at the Palisades Recovery Coalition because they use technology. And we've actually had conversations about how technology can bring resources to insurability, but he uses technology for early detection. And we thought that was another piece of the puzzle, that if Palisadian homes and homeowners can have technology assisting them to be able to identify the threat of fire in advance, early enough, early detection, that we could then mobilize defensive mechanisms and be even more insurable. So that is the setup for this meeting. I thank you all for attending. I'm going to hand it over to Sophia Liebman, who's become our best friend from Senator Ben Allen's office, our crutch through insurance. And then after we hear from Sophia, I will hand it over to Christina, who's been a great help in these insurance roundtables, and then we'll go from there. I encourage everybody to put their comments and their questions in the chat. We will curate that chat, we will ask questions, and there'll be plenty of time for Q&A afterwards. So Sophia, thank you and welcome to the call.
Thank you so much, Maryam, for being a great partner in this. Thank you all for being here. These roundtables have really been such a productive conversation. I'm sorry the senator could not be here today. He's in Sacramento, but these insurance townhalls have really informed the work that we will be doing and a lot of our legislation that we'll be introducing this year. I am excited to introduce that we have put forth our first bill directly related to risk reduction. That is SB 894, which is to create a state-backed low-interest loan program for home hardening. So this is So the goal is to help homeowners, just like you all, to afford critical safety upgrades such as defensible space and fire-resistant retrofits so families can better protect their homes and improve community resilience. And we understand that there right now is a gap between when rebuilding to be able to reach some of the IBHS standards. So this is another way that we are supporting in bridging that gap to ensure that our communities can build back more resiliently and with an eye towards insurance coverage. So that's just the start. You'll see there'll be a lot more insurance related bills that we will be introducing. But I thank you all for this productive conversation. And I know that we all have learned a tremendous amount. So glad to keep learning with you all.
We appreciate it. Thank you, Sophia. Just so that we have perspective as we go into this last conversation and obviously into the year ahead, it's only January. From the point of view of the legislative team up in Sacramento, what is your window of hearing back from the community or gaining input from the community in a way that can inform legislation this year?
Yes, great question. So the deadline for bill introduction, and that is just to introduce the bill. It does not have to be formal, full language, is February 20th. So we're actually coming up on that. And I know many of you we've spoken to about bill ideas. We're continuing to do our research and reach back out to the community. After that, there is still time for feedback on bills. We can make amendments, changes will be made, expect changes to be made to all of our bills throughout the process. They don't get voted on to be finalized until the summer. So there is still time for feedback, and we'll certainly be coming to the community for feedback and to discuss all of our bills that we run in
Okay,
the
great.
coming months.
Great. So just so everyone knows, after every one of our insurance town halls, we actually dwindle down the 10 priorities that percolate from these calls, and we inform our local lawmakers. So the mayor, the city council member, I think we've sent them up also to the senator's office, but there is a way for us to look back at this series of four, and be able to identify what Palisadians found were the most important issues around insurability, and see if we can suggest some ideas to Senator Allen before February 20th. So if everybody just stays tuned in, we'll work through that with the entire community. So thank you, Sophia. Christina, I have to thank you for helping me through the months. Always think through the topics, find the guests. I very much appreciate Venbrook's role in this entire series, and welcome again to our call.
Thank you, Maryam. Thanks for having me. It's always a pleasure to be a part. I actually got the pleasure to meet Senator Allen, I believe it was last week. They did a downtown LA event. So looking to work with him more, learning more about what Sacramento is doing and how we can help be a resource in the insurance industry and continue conversations. So as we have discussed, I will share a little bit about Venbrook for those on the call, just as a company holistically and what we specialize in and what we do. And then I would like to focus and shift the conversations into the surplus lines, ENS, non-admitted markets. For anybody that has heard those three terms, they are, for all intents and purposes, synonymous with one another, and not as taboo as I think they once had a reputation to be, and why it's important to know what they are, how they work in this marketplace, the value that they hold, and just a little bit about the differences between admitted and non-admitted markets, so folks can make educated decisions on their insurance coverages. So hopefully I am able to go ahead and share my screen. Hang tight.
You should be able to.
Okay, great. Are you able to see the screen?
Not just yet, Christina, not yet.
Okay. Is it? Okay. Saying it's sharing on my end.
I don't see your tab for sharing.
Yeah, oh, there we go.
Okay, yes, we can see your screen now. Thank you.
Wonderful. Um, so Venbrook is a full service insurance agency, brokerage here based in Southern California. I work out of our headquartered office in Woodland Hills, California. A little bit about Venbrook. This is our executive team. I want to kind of gloss over because I want to shift the conversation more into the weeds of insurance, but I do think it's important to hit on what we do as an organization. We do have retail property and casualty for commercial and business insurance. We have employee benefits for corporate benefits and specialty health. Specialty health also focuses in student insurance for college athletes, travel insurance. We do have in-house claims advocacy and claim services, specialty programs, and then we do have a wholesale division of Venbrook. My role here within the organization is the Executive Vice President of Private Client Services. So I oversee all of our private client division, which focuses on the residential side of insurance. So that ranges anywhere from properties and homeowners to rental properties, high value collections, large automobile collections, excess liability, and so on and so forth. Our specialization and what we focus on is higher net worth individuals, sometimes more with complexities to their portfolios where there's legal entities involved, properties maybe spread in different states, and a lot of moving parts. We work with a lot of business managers and wealth advisors and things of that nature. This talks a little bit more about each kind of division, which I won't go into the weeds on. Our property and casualty partners on the commercial side, and this is on the private client side. So some of these coverages and lines of business that I had just mentioned, which can be a real pain point for folks, especially as we're seeing non-renewals from certain carriers in the marketplace, where folks are displaced on their whole portfolio. I think, years ago, one carrier would offer to write an entire portfolio, and we're seeing through the years that after non-renewals, things start getting a little displaced. So it's extremely valuable for you to work with a broker that has the breadth in the marketplace to leverage their relationships, to write with solid carriers with strong financial backings and ratings, to make sure that they're going to make good on their claims. And then also being educated and consultative of the coverages that are available that sometimes folks don't think of, whether that be travel insurance or personal cyber insurance or flood or earthquake sometimes. We want to make sure that we bring a full service to the table, and we'll talk through what's required and what's optional and different coverage solutions for different folks. We say all the time, insurance is not a one size fits all, and we hate the expression of set it and forget it, because insurance should evolve in time as your portfolio typically evolves, and sometimes net worth grows over time. So we want to make sure that we have the right coverages in place where our clients aren't left out of pocket for any type of expenses. So today is really going to be around the property side of things in the Southern California market, and even California throughout, where we have seen, from 2017, I think Woolsey was probably the start of it all, that really shifted the marketplace and how insurance used to be and thought of, and where it is today. So we're almost 10 years from that starting point. And when we look at the risk in California, it's as much as we talk about fire and wildfire, it's definitely a less controlled risk. We don't typically know when they're going to happen, how big they're going to get, how out of control they get, and the devastation that they bring. I will share from a carrier perspective on the claim side. There go my lights. The number one claim that we're still seeing come through is water. So I will say that when we talk about risk mitigation and losses that we're seeing, and underwriters and carriers really tightening their appetite on, folks doing their due diligence on maintaining pipes in their home and trying to eliminate the water exposure that we have, because it's a little bit more within our control, and it goes hand in hand with the fire exposure and how insurance has got to where it is. So on the surplus, non-admitted E&S side, pick your poison on the terminology, it allows for the difference between a non-admitted market and the admitted markets are that the admitted markets are heavily regulated through the Department of Insurance. Good, bad, or indifferent, that regulation, the rate filing with how much carriers can impose rate increases and rate filings gets heavily scrutinized through the Department of Insurance. Contract changes, whether it be deductible options or coverage limits, have to be approved, and there's just a lot more regulation that goes along with that. due to the amount of risk that we've had in the state. Some carriers have found that the premiums cannot keep up with the amount of risk, which is why you're seeing in the news and have seen carriers pull back from the state. Some have just kind of closed doors on new business. Others have not only closed doors on new business, but have started to non-renew the existing book of business. Diversification of risk plays a huge part. Capacity in the marketplace plays a huge part, which opens the door into our non-admitted markets. The non-admitted markets really bring flexibility, creativity, and an alternative solution to you homeowners and Californians that might be in a riskier type area. They might have a higher wildfire score or might not model or map as well due to accessibility into the neighborhood or on the street. Could also be, like I said, saturation capacity issues. So there's a lot more flexibility within those contracts that instead of being told no, the answer is yes. Sometimes obviously premium will be a part of that conversation, but it's nice to have an alternative solution where we can start pulling back on the California Fair Plan and really placing folks with a solid, HO3, HO5 homeowners form, which encompasses fire and water liability. It's a full homeowners insurance policy written for an individual's needs. The last place we want to place coverage is the California Fair Plan. It is called the last resort for a reason. And the cover, when you have to do multiple contracts, you are dealing with a lot of different statute of limitations, loss settlement provisions, different coverage limits. It can get pretty convoluted, and that's how things get missed, where people assume that they have coverage when the contracts state that they don't. So with that in mind, I would like to introduce both my guests. I will have Burns and Wilcox begin their conversation, and we will pivot over to Green Shield Risk, who both are wholesalers, which I will let them go into the weeds of a wholesaler versus a carrier versus a broker. But in the short of it, me as a broker, I'm a liaison between the insurance marketplace and clients, homeowners, wholesalers typically working with brokers directly, and ancillary markets. I think the most common one most people have heard of is the Lloyd's of London, who work with those non-admitted markets to bring to brokers for us to bring to our clients' table. So Heather Posner is joining us with Burns and Wilcox. So Heather, I will stop sharing my screen. Let me know if you are able to share yours and introduce yourself.
I am looking at.
Hi, Heather. It's lovely to have you. You are now a co-host, so feel free to share and welcome.
Great, thank you. Let me try that again. It looks like I'm gonna.
And you'll tell us a little bit about what surplus insurers are, right?
Sure, you bet.
Perfect.
All right.
Thank you.
Can everyone see my screen?
Yes, we can. Thank you.
Okay, great. So thank you for having me. I love that these conversations are happening. I apologize in advance if I go over anything that has already been covered. However, I know that sometimes these are new philosophies and terms for people, so hearing them a couple times can be useful. And additionally, not everyone probably was able to attend all 4 of the discussions. So I will try and sort of breeze through some of the things that I know now have already been discussed and really focus on some of the things that we want to discuss today. So thanks again for having me. So I just did a quick introduction of myself. I am the Vice President and National Product Leader for Burns and Wilcox Private Client. And I guess the side points are really just, why am I the one speaking to you, right? I'm 27 years in the industry, obviously started very young. And 8 years I lived in Los Angeles. So I definitely understand the Southern California market and the fires. So for 9 years, I've been with Burns and Wilcox, and for 8 years, I've been working on developing our Burns and Wilcox Private Client, which is a group that creates expertise in high value needs, and specifically working with those brokers that also tend to those needs, and they're just considered experts in that industry. I also was with high net worth carriers for 13 years and had a start in my career at Progressive, which did not have high net worth products. However, I actually worked with the high net worth brokers to sell and supplement when they couldn't place auto and other lines with their standard carriers. So I'm also involved in the IICF, which is the Insurance Industry Charitable Foundation, and I'm the board chair for the Ohio chapter. I bring it up because it unites the insurance industry to support not-for-profits, but also because of the severity and the frequency of the catastrophes that have occurred, we have taken some of our grants and put them towards the victims of the catastrophes, either with the fires, the floods, tornadoes, and so forth. So we're trying to make sure that we're supporting those that are also in our insureds. So PRMA, Private Risk Management Association, I'm a board member and a speaker, and have often spoke on panels along with given presentations at their summit. That group is really to continue educating individuals that focus, producers, account executives in the insurance industry, and focus on getting solutions for the private client insured customers and keeping those folks educated on what is the latest in the industry. And then I do have my CPRIA, Chartered Private Risk and Insurance Advisor designation. So that's a little about me. This is a little bit about Burns & Wilcox. So H.W. Kaufman is our parent company. Burns & Wilcox is the wholesale end of H.W. Kaufman. And then R.B. Jones and Attain are actually E&S insurance companies. So our owners, who it's a family, it's privately owned business, they actually own insurance companies as well, because you can see when there's need in the market, and creating programs sometimes when you own your own insurance company can be easier than, having to go out and partner with someone. So we're working in over 90 countries worldwide. We have thousands of associates, and we're a global company. So we try and work with the very best rated companies. And so we make sure that our companies, such as Attain, are rated high, like A, excellent by AM Best. So that's just a little bit about the company. This is sort of our map of where we are in the US, and then also some of the international areas. So I wanted to put on the agenda introduction, because we could then check this one off and feel great about that. But just really quickly, I'm going to go over personal lines products offered by Burns & Wilcox, review why it's hard to secure insurance or affordable options, and review why it will get a little bit easier. So there's some good news. And we can talk a little bit about how the insurance carriers are assessing risks during that time, the California wildfire impact, and then also what to do to be safer from a wildfire. It is about insurability, but it's also about just keeping your family safe. And I think everyone who's gone through a fire, I myself have lost a home in a fire. It was not a wildfire, but it was a house fire, and it still is devastating. So I can provide empathy to folks that have been displaced from their webinar. And then also how to secure coverage. Okay, so really quick, our product offerings. So what we do is we have a lot of the personal lines products, right? Homeowners, specifically high value, is what I work on, and dwelling of all occupancies, right? Sometimes people rent their homes, sometimes they have short-term rentals, all the different things that people do with their home. Secondary home.
Sorry,
Yeah,
Heather,
sure.
I usually don't break in and I don't ask questions beforehand, but just quickly, high value is the value of the home or the value of the homeowner?
Yeah, so typically the industry itself, when it comes to carriers, typically will define it as $1 million home. And when we're talking about $1 million home, we're talking about replacement cost.
Okay.
So
that's a
not
home that we
market value.
5 or up.
Yeah.
Okay, thank you.
Yeah. We offer California DICs when, the insured really can't find any other option. They have to go to the California Fair Plan. We can then provide the other perils on a DIC. That's difference in conditions. And then most likely what you're thinking about is builder's risk and renovations, excess property. We can do the personal article floaters and flood and excess flood, which is an extremely important line of business that should always be shown to you as an option. Personal lines, earthquake, and the liability offerings. Deductible buyback in case a carrier has a really good offering but has a really high deductible, and maybe the mortgage carrier doesn't want that high a deductible, so we can bring the deductible down. It's a separate policy. And then excess physical damage for personal auto. So if somebody has a really expensive auto and they can only get their auto insured for maybe half of it, so it's 500,000 is what it's worth, but they can only find coverage for 250, then we can actually provide a layer over that to get the full physical damage covered. So when it comes to these different lines, we have multiple carriers to approach depending on the specific risk. We actually have over 100 personal lines carriers, which can seem very daunting. And how do you keep up with all those guidelines and underwriting requirements? However, it can be very niche. Like for instance, right now in California, there's about 9 high value carriers that we can approach. And all of them have different guidelines, different appetite that we have to be aware of. And based on the risk and the conversations with the brokers, we can then determine where to approach the market. Sometimes we will approach all of those markets. Sometimes it doesn't make sense. There's something like the year build that throws it out, or they don't want a course of construction that would eliminate some of those carriers. So we really analyze our guidelines and then approach the market for everyone. One of the things that we do is, as well as Venbrook and Christina, is we try and be really consultative to our brokers as well, because what you might submit to a admitted market might be more facts than to the E&S market. The details and the story can be really important. And I'll talk a little bit more about that in future slides.
And Heather, I just want to be mindful of time.
Yeah.
Right.
So really quickly, a market review. I'll just be really quick and point out a few things, that it wasn't just the California wildfires that hardened the market, but the California market probably got the hardest, right? And so carriers can make money 2 ways. They can either have underwriting profits or investment profits. Underwriting profits are simple, right? They just have to collect more premium than they have claims and expenses. For years, though, companies were not making underwriting profits. And what was happening is they were relying on their investment products, and those didn't necessarily perform either. And then with the severity of the claims and all the different events that have happened in the US over the years, and them keep getting worse, that we found that underpriced reinsurance was a real problem. And so that sort of changed overnight. They were unprofitable for too many years, quickly reevaluated their carrier books and the severity of losses, and some of them exited the market. So just moving sort of on, you can sort of see this is the US billion-dollar disaster events. And so you can see how severe they have gotten over the years. 2017 and 16 were very rough years, and you can see it just continues from there. And when the reinsurance market has to make changes, they're going to make sure that they're passing those costs along to carriers. So the carriers then need to get more rate. And as Christina mentioned, they have to go through and get that approval when they're admitted. When you're on the E&S side, we don't need those approvals. We can change sometimes daily on what a carrier is providing and what their pricing might be, or at least it seemed like it was daily when it came to the real hardening of the market, but it has calmed down now and more capacity is coming to us. So this is sort of where we are now. Inflation has slowed, supply chain has regulated, it's not difficult anymore. Maybe a few resources would be the reinsurers are making profits, and additional capacity continues to come into the marketplace, which this is very good news. And this is a softening market. So there will be some admitted carriers that will expand their capacity, which is great news. And then that allows for us on the E&S side to really just work on the things that truly should be in the E&S marketplace. It seemed like for a time, just a super high value home might be the only reason it was in the E&S marketplace. Just because someone doesn't want, a carrier wouldn't want to put, 40 million in one place when they can spread it amongst, 40 homes and have $1 million on each home, and then potentially have more spread of risk. So the California market, there is some carrier hesitation still, even on the E&S side. So even though we can price appropriately and we can make sure that there are coverages that make sense for the client, there's still a little bit of hesitation. That's mainly because what happened with the wildfires, specifically in the Pacific Palisades wildfire, is it created some mistrust in the models. The wildfire mapping, the Palisades were considered low to moderate, so that was not expected. But it also wasn't a very large event for the E&S marketplace because it was low to moderate. A lot of the admitted insurers were the ones covering the homes. And then what makes carriers extremely hesitant is, risk management has been proven. We feel like we've educated, but there can never be enough education on risk management, but few have truly invested. So it was exciting to hear about some of the discussions that you folks have had. And this sort of goes over a few of those things with, as a community, and then what you can do as a homeowner with home hardening and, all of those things it sounds like you folks have covered. So what about when securing insurance when it comes to the E&S marketplace? I think it actually starts with mitigation when it comes to choosing your builder and making sure you have the right builder and that you understand the contract, and that if possible, you do not sign anything that is a waiver of subrogation, a sub-waiver, or a reservation of rights, or hold harmless, because that will really limit the carriers that we can go to. Basically, that tells us that the insurance company cannot sue third party people that may be actually at fault for the claim that happens during the build. So very few carriers are interested in having that language in the contract. So it can be asked to be taken out if you do have that, and a lot of times the builders will take it out. So that's good. And if you're not understanding your contract, making sure that you're reviewing it with a contract lawyer or construction lawyer. There are quite a few in Southern California, so that's something you can always do. And then partnering with the right agent and broker is really important. So a broker that can tell your story. And the reason I say tell your story is I know that the fires were devastating and that's what's on people's mind. But you have a story as an insured prior to those fires. So for example, we might ask for claims history for the last 3 years, but it actually might be great that if you've been claims free for 10 years, tell that to your broker, because that's obviously more impactful. You've had a CAT claim, however, you had no other claims for 10 years. Make sure the story is told as well as you can. It does matter to our carriers, and it does help us negotiate. Disclose all risk management efforts, and I say all, so even maintaining, vegetation. So you have landscapers, and they have, direction to make sure that all the vegetation is properly tended to. That's an important fact. So people think it always means devices, but it can also mean contracts that you might have to maintain your property. Coverage, what do you need and what is nice to have, in considering higher deductibles. We do a good job coming back to our brokers and sort of say, hey, we've got 1 or 2 markets, but honestly, they're not going to, if we go there with all of these coverages, they're not going to do it. But here's what they will do. Because it's better than not having a solution by just submitting, what people may be used to. Marketing strategy, I would just suggest that you engage with one broker, and then if you need to engage with another because you're not happy with the results, that would be a good way to go about it. And the reason I say that is because what happens is if E&S underwriters start seeing the same submission, the same home, they feel like, the insured is just sort of all over the place. They might be hearing a different story because we asked more questions and got your claims story and history, and then they're just getting an application from another. So it makes it very difficult for them to put out terms, and usually they will not put out terms if they've seen the submission a ton of times. They'll actually pull terms. I would also say have your brokers review all your personal lines needs to make sure that, you can fully shop for all of the perils that are needed. And then make sure that they have market access and are working with a wholesaler that has a lot of carriers and market access. And that is everything for me.
Thank you.
Yeah,
Okay.
appreciate it. I was going to say, Maryam, do you have any thoughts or questions before we jump to
I thought we might take them afterwards, but I quickly do. I did want to ask you, you said something about tell your story and that there is a story to be told, especially in these markets that have sustained disaster like ours with the fire. So my question is, if a homeowner comes to you and is looking for better insurance, would it be helpful for them to be able to say to you that they've built back in a specifically insurable way? Or, I mean, most people have to build back to city standard, city code, but some people, and this is the conversation that's been going on around me here all day, some people are doing more. There's a fund, we've mentioned it on these calls before, it's called the Delta Fund. It helps people be able to have that money that they need to build in a more insurable way between what city code asks for and what IBHS standards are. Is that something that is valuable for you to know as you go out to shop someone's lawn?
Yeah, absolutely. It gives us a lot of negotiation power, especially in areas where, there's a lot of E&S and you have to maybe worry about saturation. And so then the markets get saturated and they stop sort of providing as much capacity. You got to think about it as like, you want your risk to be a beautiful package to them, right? Like it needs to be decorated. And if I'm able to sort of present like this person takes risk management seriously, they've done all this home hardening, including devices and all of the things that you folks have spoken about. It's huge for us to be able to show that and tell the markets that. It helps us negotiate for coverage.
So if it's okay, I think we're going to segue over to AAA and then come back to Patrick, if that's okay. But it's a good segue because I was going to say in previous meetings, we've learned about this idea of market saturation, right? So I think it was Mercury that told us that every insurance company assesses a market and they have that place where they think they've reached risk saturation and they don't look anymore. It doesn't matter how insurable you are. Once they've reached that limit, they're not looking anymore. As surplus line insurers, are you able to re-engage those very same insurance companies? But well, maybe we'll let Jeff answer that.
Sure.
Okay. So AAA, we're introducing Jeff Wright. You are the Vice President of AAA Insurance, and we appreciate that you've joined us today.
Yeah, thank you, Maryam. Also on the call is Alan Woods. He works with our legislative and government affairs. And I thought I would start out first by giving a little bit of history for the Auto Club of Southern California. We were founded in 1900, which means that we've been around 125 years, so a very, very long time. We have 8.7 million members in Southern California, and 60% of the households have a AAA member. So it's pretty incredible when you think about it from that aspect. 32% of our member households, I know I'm giving a lot of data, but 32% of our member households have a AAA auto policy, and 19% of our member households have a AAA homeowners policy. That makes us the largest insurer in Southern California, which is our footprint across the state. We don't sell in Northern California for homeowners insurance. So we have offices that go all the way from Chula Vista all the way up to San Luis Obispo, and we've always been committed to Southern California. We currently have 81 branches. We have around 800 sales agents and 8,500 employees that serve our members. And our primary mission is to provide valuable services and products to our members and to serve our communities. We started offering homeowners insurance in California in 1983 and have continued to offer insurance and write new business in a very challenging insurance environment. I think you guys have talked about that on several calls. We do write insurance in other states as well, but since 2021, we have grown our California book by over 20%. So I know you want to talk a little bit about risk assessment. As far as AAA goes, we price and underwrite homes individually. It's a very important factor to take into consideration. And we take several factors into consideration. So just to mention a few, because there's so many to go over, I would like to talk about underwriting guidelines a little bit. The landscape of insurance is changing on a regular basis due to climate change, urban spread, and multiple other factors. So how we underwrite today and our current guidelines might not be the same 1 or 2 years from now. Similarly, they're not the same as they were 1 or 2 years ago. Right? Insurers go through different cycles trying to balance growth and profitability. And right now, as we all know, there's not a lot of supply for homeowners insurance in California. This influences the concentration of an insurance book. And, that is something that we continue to monitor on a regular basis, like every other insurance company does. And you guys have mentioned that. A key element of insurance is diversification. I wanted to talk just very, very briefly about models. I know you put that in one of your emails. As an organization, we consistently look at different models as tools, but I want to be clear that it's not the only determining factor in helping us monitor our book of business. We do agree that it's more effective to look forward rather than backwards with insurance, and models are really pushing the industry forward. But essentially what it comes down to is it's extremely important for us to get an accurate pricing for the risk that we are taking on. Some of the factors to think about when you guys are rebuilding, and I don't want to go over, too many that have been talked about on previous calls in detail, but we are also a big proponent and fan of the IBHS standards. And we're big believers in their home hardening science and philosophy. 5-foot barrier from the home, Class A roof, protected vents and gutters. Those are just to name a few. I think you guys actually had them on one of your calls to go over everything that they provide. But it is in our belief too, and we are big believers that really does a great job mitigating risk. And then the community approach versus the individual approach, I think both are very important, and we do take both into consideration. We've spoken to communities like other insurance companies have that have worked together to help minimize risk. We personally went out to the Dixon Trail. I'm sure you guys have heard about that community. We've talked to the city of Rancho Santa Fe about what they're doing as a community to minimize risk. And it is extremely important, as is the individual approach. So we truly do look at both. And then water shutoff devices. So I believe earlier on this call, non-weather water was discussed briefly. And I know fire is the main topic of conversation in this meeting, but non-weather water is a big risk for insurers as well. And a factor that we take into consideration when accepting risks. So we are big believers in the water shutoff devices. I don't know if that has been spoken about on any of your calls, but a couple examples would be, Flow by Moen or Finn are a couple examples. And they basically have the ability to shut water off to the house when there could be a water leak. So when you think about it from an insurance perspective, that could drastically reduce severity and frequency of claims, which obviously really helps us, but I truly believe it helps the consumer as well. So it helps everybody on this call. One aspect that I think is very important as you rebuild and as you are looking for insurance is to make sure that we have a focus together, both of us, in having the right coverage on each home, in addition to availability and affordability. We take a lot of measures at AAA to try to get the most accurate, what we would call coverage A, which is the amount that it would cost to rebuild your home. And I think it's a very important aspect that you guys, every consumer takes in to make sure that they think that they have the most accurate coverage and talking with the insurance companies to make sure that you're comfortable with your replacement cost. So, I would say that availability and affordability are two concerns that I hear the most. But what I would say is less competition in the market is bad for the consumer. But in this situation, it's bad for the insurance companies too that are still writing in California. I think concentration will always be a concern for AAA, as it will for every insurance company. And we need to allow quicker rate and underwriting approvals for insurance companies in the state. Because at the end of the day, I think insurers need to be able to get to a place where they're comfortable with their rates. And that's something that we're striving to so that we can provide availability and affordability to everybody in Southern California and across our footprint across ACE.
Okay.
Alan, do you have anything to add?
That was great. Yeah. I think one component, like you said, that we haven't spoke about before is the water shutoff devices. So I thought that was a good add.
Right. And that actually is something that's been brought to our attention more recently, that the damage from water can be, so for homes that are standing, the damage from water can be even more costly to repair than the damage from fire or smoke. So that's an interesting thing that was brought up. Daniel, I'll give you the floor last, if that's okay. I do want to ask a little interim question, and there are questions in the chat that we'll get to when everybody's done. But so Heather, you brought up something about insurance companies make money in a certain way, right? So it's the premiums and then it's investments. And so obviously, I mean, I think everybody knows, right? Insurance companies invest the money that comes to them. They don't just sit on it. So those investments are out there in the market. You, I'm sure, have your own ways, and presumably you're making money off the money that we are paying in premiums. So my question is, Jeff, and you mentioned it too. So my question is, if an let's say, as you all have noted, that the world changes all the time, that the guidelines you have for underwriting 10 years ago aren't the ones you have now, and they're not going to be the ones you have in 2 or 3 years. Let's say we're looking at a world where risk is higher for insurance companies and premiums are going to be less lucrative, but you're still getting money and you're still investing that money. Is it possible to think about a scenario where insurance companies are making the lion's share of their money through their investments, and so they're less focused on the risk assessment in local markets like Southern California, where maybe risk is high, but you have to stay? I mean, people have to be insured. I'm saying, is it possible to sort of
It
that
is. I mean, historically, that has happened in the market when some investments were running really well and it's sort of a softer market and insurance companies want to grow. They might go ahead and take a little bit of underwriting loss and not necessarily always have profits year after year and not be so worried about it, because in the end, with the investments, they're still profitable. Ideally, we always have underwriting profitability, but that doesn't always happen. But it's not such a bad thing if we're at least coming out with profits because of the investments.
Jeff, did you want to say something about that too?
One thing I would just add, that's separate from that, from a AAA perspective, we're a membership organization. So it's extremely important for us to be, ingrained in our communities and working with our communities as well. So times change. I've worked at AAA for 19 years. Guidelines change, everything changes, but we try to stay true to the fact that we're a membership organization and keep that top of mind.
Right. Yes. And it's very interesting that 60% of the population is involved in AAA somehow. Okay. Thank you. So we are going to, Christina, do you want to introduce Patrick Blanford from Green Shield Risk?
Yes, Patrick works CEO and founder of Green Shield Risk, another wholesaler in the marketplace who has also come into this market with their own proprietary homeowners product. So I thought it'd be very valuable for him to be on this call and to join to discuss how they develop this product that is exclusive to them and their risk assessment, appetite guideline, and things that they're seeing in the marketplace that make them feel comfortable to write certain risks versus others. So Patrick, the floor is yours if you would like to introduce yourself.
Great, thank you. Let me just trying to share. Looks like somebody needs to grant me access to share, if that's okay.
You have been granted access. You are co-host. You should be able to share.
Okay, let's try it again then.
Yeah.
Here. One moment. Let's try once more.
I was also going to say, Patrick, if you can't get it, I have yours. I'm happy to share my screen. But there we go.
There we go. Thank you. We can see your screen.
Great. So, as the title slide says, our mission is making the world more insurable. So what I'll try and do, and I'm going to try and get through this, guys, really quickly. So I know there's a lot of content here and I want to get to questions, but what do we mean by making the world more insurable? And so if you think about the Green Shield Risk mission, it really is bringing in mitigation and
Real quick, we're just seeing, it looks like a forest. I don't know if you moved the slide to a different screen.
Sorry about that.
There we go. Thank you.
Okay, how's that?
Yes, that's perfect. Thank you.
Okay. All right. So overall, the strategy is bringing in risk mitigation at the point of underwriting. And I think historically, the industry, has tried to move in a direction of automated underwriting and algorithmic and trying to simplify everything down to a score. And in our view, kind of lost in all of that is actually trying to make the property more insurable. And so that's what we've been building at Green Shield here over the last 4 or 5 years. And so um, just moving forward, so Green Shield Holdings owns two companies. We own Green Shield Risk Solutions, which is an MGA or managing general agency, as well as a wholesale broker. And then we also own Property Guardian Solutions, and I'll spend a little bit of time on each of those. But both of them are focused on wildfire. And so Property Guardian Solutions is our wildfire risk analytics business. And we actually um, I would echo everything that we've heard on this call so far today. When we started Green Shield, we felt like a lot of the wildfire models were not particularly sophisticated. They haven't historically been particularly accurate. And so we decided to build a better mousetrap. And we actually licensed Property Guardian to commercial carriers. So if you think about condos and HOAs, wineries, ski resorts, casinos, hospitals, our clients are writing large commercial risks. They are looking for more sophisticated wildfire analytics, and that's what we have created and licensed at Property Guardian. We then use that for our own benefit on the MGA, and I know you guys have heard a lot of um, acronyms, but managing general agency, probably the simplest way to think about this for people that are not in the insurance industry is we do everything but price or but take the risk. So we underwrite the policy, we price the policy, we issue the policy, and we manage the claims process. Our carrier is Lloyd's of London. And so I know this conversation is specifically around the E&S markets. And so we manage a program through Lloyd's of London, and that is an affluent homeowners program. And so in California and Colorado, we can write up to $10 million of total insured value, which Jeff kind of mentioned the concept of coverage A or the replacement of the dwelling. And so we go up to about 6.5 million of coverage on the dwelling and 10 million of total insured value for homes in California and Colorado. But why don't I spend a quick minute just talking about kind of what's going on in California and in our view in all of the Western states. Wildfire has certainly increased not only in frequency but severity, and certainly some of that is driven by climate, but just as importantly, the amount of insured value in exposed areas. So the number of properties that are in the wildland urban interface is dramatically higher than it was 10, 15, 20 years ago. So this is a growing and expanding problem, and one that the insurance industry, kind of needs to take head on. Our view is we need better analytics to be able to make good underwriting decisions. So, Heather made the point that a lot of the existing models actually had the Palisades as a low to moderate risk area. We viewed it very differently. And we actually sent our models to CAL FIRE 4 months before the fires started. And we rated not only the Palisades as a high area, but an extreme area. And one of the things that we look at is recurrence. So fire tends to repeat itself in the same areas. It is driven by topography, vegetation, and weather. The weather doesn't change. Santa Anas are always going to come from the north and the northeast. Vegetation grows back and the topography doesn't change. And we actually, in our recurrence score, we look at when is a community susceptible to a fire more than 2,000 acres, which we would deem to be a major fire. And we actually had the Palisades as being 25 years overdue for a fire of significance, not having had a significant fire since 1978. And so we think the industry can and needs to be doing a better job of evaluating risk, which then really gets to how do you mitigate risk. And I think Christina made some great points earlier about the need for community level mitigation and building resilient communities and resilient homes. And that is, absolutely what we try and do at Property Guardian and Green Shield. When we look at our clients' portfolios, we look at it at four resolutions. We look at the structure, we look at the parcel, we look at the community, and we look at the region. And fundamentally, what we're trying to understand is the intensity of potential exposure. And so a lot of the industry models will look at what's the probability that a brush fire will happen in this area. And they can tell you, there's a 3% or a 30% chance of a fire entering this community. But what they don't do is they don't look at how fast will the fire move, how intense will it be, what will the ember fallout be from those areas, and that's what our models are trying to get to. And yes, scoring is a part of it, but more importantly, what we're trying to do is define the mitigation. And so when we do Property Guardian analytics, we actually highlight this is the mitigation that's going to make a difference. This is the mitigation that's going to make the property insurable. And then, so those are, kind of all of the outputs from, Property Guardian. We also, in addition to doing the scoring and the mitigation recommendations, we monitor every active wildfire in the U.S. And you can see this is, kind of the GIF animation here is we look at a spread forecast over 14 days. If you were to have looked at our LinkedIn profile on the day the Palisades fire started last year, we put a GIF up on our LinkedIn profile the day the Palisades fire started, and we put out a 14-day forecast that turned out to be 98% accurate. And so we really are trying to use more sophisticated science to help us, kind of underwrite smarter. And then, that leads us to the insurance part of our business. And, as Christina mentioned, we have our own program. So we market as Guardian Elite, which is it's a homeowners policy. It's not a wildfire policy. So like all of the comments that we've heard on water damage, I echo all of that. And so, we look for water sensor technology and shut-off valves everywhere we can. It's a critically important issue. But we also recognize there's just not enough insurance capacity in states like California and Colorado. So in addition to providing the analytics, we wanted to bring in additional insurance capacity, and that's why we launched our Lloyd's of London program. So I know I spun through a lot of that very quickly, but I know we've got one more speaker, I believe, and I need to get to Q&A.
That was excellent, Patrick. Thank you so much. So I'm going to throw it over to Daniel Fogelson, who is actually a Palisadian. I have met him. So sometimes if you're hearing ambient noise, I'm at the Palisades Recovery Coalition. We actually have a headquarters in Pacific Palisades. Happens to be next to Garden Cafe. And since the Palisades High School opened yesterday, there's quite a hubbub going on over there. But we're also a recovery workspace. So we've opened our doors to anybody who needs to come in, sit down, plug in their laptop, jump on the Wi-Fi, pour a cup of coffee, and do some work. And so we've had the benefit of a lot of people coming and going. You hear the din around me, but we also get to hear about some of the issues that builders and architects are seeing out there. Interestingly, most of which we were able to foresee, and we have a plan that sort of addresses some of those solutions. Before I give it to you, Daniel, you were in this space yesterday, so you'll know what I'm talking about. There are some people who come and go in the Palisades Recovery Coalition who are involved in various parts of this recovery. Some are, involved in the undergrounding or other things. One of the very interesting things that was shared with me a couple of weeks ago that I want to share with all of you is that I was told that if the city, the county had done proper risk assessment, they should have been able to foresee this disaster. And some of the reasons were that the infrastructure is, and I'm saying this because, Patrick, you made reference to better risk assessment, right? So apparently had the city and the state and other risk assessors taken a look at how old the infrastructure is, how dysfunctional it had been, how much vegetation had been allowed to grow, how little vegetation mitigation had been, managed or invested in over the last 10 or 20 years, how much the shelf life of poles, like electricity poles, had been overshot. If people had looked at all of these factors and, mixed that in with the fact that most insurance companies were making the exit, they should have been able to foresee that a disaster was on its way, and maybe should have either mitigated through brush clearance or checked the infrastructure. Just something to put out there. Maybe we can talk about it later. But to some degree, is risk assessment also something that our local governments should be doing in order to mitigate some of the factors that lead to these kinds of disastrous disastrous events. So something to put out there for everybody to think about. And then Daniel, my friend and my fellow Palisadian, tell us what you've been up to.
Hey everyone, Daniel Fogelson with Sonic Fire Tech, but like Miriam said, Palisadian, born and raised. I think I still probably hold a couple PPBA records, so going way back. But yeah, like so many of you, I lost my home. I was on Los Lomas, and in the whirlwind aftermath of figuring out what to do, I was looking for solutions for home hardening and figuring out ways to mitigate what we all experienced and find ways to protect my home, which I'd got in May of 24. So, was real happy and proud to be able to get that house in the Palisades, and then here we are. And to what Christina was saying, I was able to get non-admitted insurance, which I'm very happy I was able to get in the home purchasing process, so I didn't have to be on the FAIR plan. But my colleague Remington, who's also on the call, we go back some years, and after the fires, he called me because he's got some family in Altadena and living up in the Santa Barbara area, dealing with wildfire all the time. Gave me a call and said, buddy, we got to do something about this. And so we put our heads together and we're looking for solutions, which led us to Sonic Fire Tech and finding this technology which vibrates the oxygen in the atmosphere so rapidly it actually breaks the chemical chain of fire. So it prevents ignition, knocks down embers, and is something that was beyond fascinating to me, and something after seeing it in action many times over, believe so strongly in that I actually joined the team. So not just a customer, which I will be with my rebuild, but working with Remington to get the technology out there, protect homes, communities, and really try and stop something like this from happening again. So happy to introduce Remington, who's on here, and he'll tell you a bit more about Sonic Fire Tech.
Yeah, thanks, Daniel. Thanks, everybody. And nice to meet you all. Yeah, what we realized in the LA fires is our infrastructure in the built environment is not suitable to meet the challenges of the future. That is coming at us faster than our policy makers and our bureaucracy's ability to adopt to it. So with that in mind, as I watched, as Daniel watched our communities burn, we realized embers were the cause of that destruction. And IBHS's research and reports are around those embers. In that moment in Altadena, I saw that ember storm and thought we needed directed energy to autonomously defend homes. And these homes cannot rely on water or power because those two things aren't available, as I watched a hose run dry and I watched a transformer blow. So as we, travel to work in a Waymo, a self-driving robot, we get our food delivered by these self-driving robots. And I in Santa Barbara watch rockets every day go up in space and then come back and land autonomously. It seems like the future is here. And so with all that in mind, I went on a journey to find a technology that was going to be that solution, and found NASA engineers that were working on a technology using acoustics to break the chemical reaction of fire in the environments that were much more devastating, or extreme, I should say, than the LA fires. So the surface of Venus and the surface of Mars. And what we found was a technology that, to Daniel's point, it's an acoustic generator that deploys a frequency of sound around a home or in a building inside of a home that oscillates oxygen at a rate that breaks the chemical reaction of fire, preventing ignition from occurring or suppressing fire rapidly without water, foam, chemicals, or collateral damage to a home or infrastructure. So we are designing the system to replace internal-based water sprinklers of the future. That's a 150-year-old infrastructure that leaks, causes damage that we all know about and you insurers are familiar with. But also we envision the technology defending homes from the threat of embers, which were 90% of the cause of that destruction. I'll play a quick video for you all just so you can kind of get a 60-second understanding of who we are and what we're designing the technology to do.
Introducing Sonic Fire Tech, the next evolution in residential interior and wildfire defense. Inspired by NASA-engineered acoustic technology designed to protect homes before fire ever takes hold. Outside, a perimeter of sound surrounds your home, disrupting and neutralizing embers before they can ignite. Inside, Sonic replaces traditional water sprinklers with instant acoustic fire suppression, stopping flames at their earliest moment, without water, without chemicals, and without damaging the home it protects. No flooding, no foam, no delayed response. Just intelligent, autonomous, damage-free fire defense. Sonic Fire Tech.
Okay, so my essential question for the insurers on the call, and we can go into Q&A, is do you take these kinds of, and we've been saying for a long time, 2025 is here. So it's a different world than it was 50 years ago, 20 years ago, 10 years ago. There's a lot of technology at hand. We've been hearing about it. Do you take new technologies into account?
I would say our carriers definitely do, but we have to be educated on those technologies because a lot of times they're not. So we're selling them the technology if they are not aware of it. So, for our Lloyd's of London folks, they don't all know what Firewise means and things of that nature. So we even have to describe that, and it can mean a difference in what we negotiate. But Patrick, I know you've got some insight on it too.
Yeah, I mean, it's so core to what we do, and it was one of the problems where we fundamentally we think that there's kind of a breakdown in the way the industry works. And I won't use the name of the wildfire score, but there's one kind of dominant player that does wildfire scoring. There are a handful out there that probably have 90% market share, and those models tend to get updated every 3 to 4 years, and so there's not a lot you can do that's going to change your score. And so when the broker goes out to market and they says, "Hey, I've got an XYZ score of 88," you can do all the home hardening in the world, but it's not going to change that 88. And you're going to have a lot of carriers that aren't able to write a policy with an 88 score. It's going to be a very high risk score, and no matter what you do, they're not going to change their point of view. I think that's why our view from day one, which was combining risk mitigation and underwriting together, bringing insurance capacity and mitigation, makes so much sense. And so, the way that we built our business is, kind of incorporating all of that mitigation, giving credit for that mitigation, and making those properties insurable. And I agree with some of the points that Christina was making earlier, which is telling that story to the market is really important. The reality is some carriers are set up to do that and will listen, and others aren't.
So this would be part of the story to be told. And if it gets you an insurance discount, it does. If not, you've protected your home anyway.
Yeah, or maybe not a discount, but even insurability, like you were talking about.
Yeah, just gonna say it might not even be a discount. It just might turn a no into a maybe, or a maybe into a yes to actually offer an insurance policy on the risk.
Jeff, do you want to chime in on this?
Yeah, I think when it comes to technology, it's ever evolving, right? That articles are coming out with new technology all the time, and it's our job as the insurers and the consumers to do research as far as risk mitigation goes. From our perspective, I would say it goes back to we truly do look at every risk on an individual level, and there's so many factors that we would take into consideration on an individual level.
Okay, I'm going to go down the questions that are in the chat. You guys can see them too, but this conversation started, or at least before we convened, there was conversation about the damage that water and sprinklers actually deliver. So a lot of the technology that we've heard of in the last 6 months involves water. It's people talking about sprinkler systems or automated spigots that will deploy water. And it sounds like, yes, that might quell the fire, but it also might hand you some water damage. And this does not, obviously. So something to just think about. I mean, I guess insurers, risk assessors, if somebody comes to you and says, we've got this great sprinkler system that will automatically deploy even after we leave, and it's just going to douse our entire house and we're not going to burn, do you guys sort of look at each other and say, yeah, okay, but what about the water damage? Well, that can be rhetorical.
Yeah, I mean, from my standpoint, they're different issues. And so, kind of the water damage that we're concerned about would be, not related to wildfire. And so, we're worried about, pipe bursting. We're worried about, somebody being out of the home and water kind of running rampant for hours or days and creating a lot of loss. Most of the fire retardant and sprinkler systems, that are wildfire related are going to focus on the exterior and focus on the vegetation in the area. And so would have a very different impact than what I think the insurance industry is worried about from a water damage standpoint.
Okay, got it. And you mentioned the flow and the fin, which are being marketed, they detect water leaks. I, for one, did not know that those can help with insurability. So I hope everybody takes that away from this call. Okay, so what type of insurance coverage should a general contractor carry for new construction? Specifically, would a builder's risk policy be required or recommended? This is during insurance. This is going to come up over and over again in a community like Pacific Palisades. Can you guys answer that? Christina, you can go for it if you want. Otherwise, Jeff.
I was going to say this might be a better question for Heather, Patrick, or Jeff in regards to the verbiage that they need. I believe Heather referenced it's more or less not signing away the subrogation of rights to sue, that if something goes awry on the contractor, the GC's end, you have the ability to go after them for a claim to remedy the situation. When you sign away those rights, it basically eliminates the option for the homeowner to go after that GC if the fault was on their behalf.
Okay. Jeff, anything to say about what kind of insurance the builder should carry?
No, I would say that we have an agency that we can provide, contact information in that does, more insurance for general contractors in that kind of situation.
Yeah,
So
the
right-
only thing, Maryam, I'll follow up. The GC, they should just have their insurance bonded. That's typically what we look for on our end, is to make sure that the insurance is bonded on their end. And again, I know a lot of GCs operate a little bit differently, so making sure that you're giving them a checklist of things that they have to hit on before allowing them to, come onto the premises and begin the work.
Okay. Will you follow up, Christina?
Sure.
Send me that information. I can send it out to the community. But it does seem to me like this, Pacific Palisades and Altadena are going to be two areas where there are going to be a lot of builders and contractors engaging. And so it'd be important to let them know what kind of insurance they should be carrying.
Yeah, to the extent it's useful, we actually have several builders risk carriers that are property guardian clients. And so we're providing them with the analytics to underwrite their builders risk. And we have several of those projects in the Palisades. So happy to connect. I put my email in the chat. So if anybody wants to reach out to me, they're welcome to.
Okay, thank you. All right. So why is it that insurance risk is assigned hyperlocally instead of across a broader geographic area? So is it assigned hyperlocally? And one of the things we've been talking about the state too is, what if we become an insurable community? So can you lift out, not look at home per home, but think of a community that's building back from the ground up in a particularly insurable way. So can you answer that question? Why is it hyperlocal versus geographic?
Happy to chime in. It has to do with the spread of risk. And what we've learned from past fires is the need for diversification. So there were some carriers that were heavily saturated in the Paradise area and Tubbs fire area, which then indicated insurance carriers really need to keep an eye. And it's part of what you've seen over the last few years of the non-renewing of current homeowners. And it's not necessarily because the carrier wants to leave the state altogether. It's because most likely someone looked at their book and realized that they are heavily saturated in a certain zip code. And while rebuilding with all the safe materials, there's still the idea of if something goes wrong and one insurance carrier is on every single home in an entire zip code, about one insurance carrier is going to have to pay out on everybody's catastrophic type loss. So I believe it was Heather, someone that had mentioned that when we're looking to diversify risk and, look at capacity and saturation issues, you could have the perfect home. You could be doing everything from soup to nuts. On the risk mitigation side, it just could be that you were a little late to the party, especially if it was a new purchase, that, there might be 10 other homes on that street currently insured by the carrier that you're thinking of or the carrier that you want, where we have to pivot and approach a different carrier that might not be as heavily saturated in that area. So there's still just a balance of, it rates well or it models well, it's rebuilt well, but if there's too much in that area, then we have to look at it. Insurance overall is a pooled shared risk. So especially on the mid side. So I'm originally from the East Coast and we would get that all the time that, why are my premiums going up because of the hurricane that happened in Florida or because of the wildfire that happened in California? on a global scale, yes, insurance carriers do have to adjust their rates based off of all the catastrophic events because it's that carrier paying out on that, which then, like I said, pivots into the E&S surplus lines market where that's more hyper localized because it's not one, there's so many different syndicates that we could go to where it's not one carrier paying out on the nation's catastrophic losses throughout, if that makes sense.
That makes sense. Thank you. Okay, so someone said, Craig, you said you missed the third roundtable. Was it recorded? Yes, and I dropped the link in the chat. You can also go to our YouTube website, our YouTube channel, and you can see all the recordings. Jeff, I'm a current AAA insured on my home. Jeff, will you get in touch with that person? Okay, I think
so Alan Woods put his contact information. If you guys have any, specific questions, you can email him and we could get you the right contact person.
Yep.
Okay, great. Next question is, if I rebuild with 100% non-combustible materials like light gauge steel and metal, no plywood, no wood at all, and then use fiber cement exterior and roofing, would you consider this more insurable? I think ultimately is a question. FYI, this is more than what IBHS suggests. By the way, at one of our previous town halls, we did ask, we said many people are rebuilding, they're using wood to frame. Isn't that, not good? Don't we not want to see lumber? And I believe the answer from the insurance companies was that you don't mind, that in the end, it's the finishing and the way that the envelope is finished, how tight the windows are, that's what makes a difference, that the frame can be wood. But can somebody answer that question? If somebody builds in that way, are they more insurable? Jeff, maybe that's you.
Yeah, I could take that. I think the answer is yes. I think there's a lot of other factors at play. But again, I think that goes back to, we could have individual, underwriter take a look at all the different individual factors and speak with you individually about your situation.
Okay, Leon, do you want me to ask that question? How do you diversify your concentration risk in SoCal? I think they might have answered that, but.
Yeah, so a couple different ways. So we have, I think I mentioned 81 branches, across our footprint. So then you're bringing in new business in different areas. And then it looks like you wanted more of an actuarial perspective to that question as well. So I would say better matching of premium to risk, making sure that the premium represents all the costs for insuring that risk, including the cost of capital and reinsurance costs. I don't know if you guys have gone over, reinsurance costs in previous calls, but making sure that the premium reflects, the efforts of the insured or the community has taken to reduce risk, so that we reflect that in the premium and provide some encouragement for risk mitigation.
It's not too much. So your fronting carriers don't care that you're all concentrated in Southern California?
We operate in 22 different states.
Oh, you do? Okay.
Yeah.
I thought you just
I was
said just got it.
No. I was just speaking to Southern California for this call, but yeah, we're in other states.
Understood. Thank you.
Okay, so the next question is, Patrick, it's a compliment. That was excellent. Happy to see better technology risk assessment be used in a technology outdated industry. That has occurred to many of us, that this industry does not make good use of technology, even though it probably should. And, maybe technology wasn't really that much of an issue previously. We're in a time where technology is advancing exponentially, it seems, annually. But yes, it certainly does seem that insurance could take technology into account. The question is regarding risk mitigation recommendations. Does your model account for active wildfire defense? And I think active wildfire defense is those sprinkler kind of systems that we were talking about.
So it does. So our model incorporates, a variety of different, kind of risk mitigation metrics. Fundamentally, we think most mitigation needs to happen before the event. And so we look a lot at defensible space. We look at the components of the parcel and the structure. So we're looking at structure to structure, ignition exposure. We're looking at, kind of the vegetation. We're looking at the combustible material. There's been some conversation around, kind of the ember fallout and how much, IBHS did a study and more than 90% of structures are taken down by ember. And so much of our mitigation modeling is focused on, can ember be defended against in this area? And there's a lot to be done there. But yes, anything that's done with retardants or sprinkler systems or active defense will also be included in our modeling.
Okay, well, that's an excellent way to get to our last question, which actually brings up some conversations we've had here in the last couple of days. The question is, building with wood also contributes to the fuel load in the event of a fire, which compounds the spread of the fire. To be a good neighbor, you've got to build with something else. And so, Patrick, you were just talking about the spread of fire. So again, a couple of meetings ago, a couple of insurance town halls ago, we brought up the fact that most of the building that we see going on, there are some steel frames that are going up, but that's the minority. Most of the frames that are going up are still lumber. And to the naked eye, that seems alarming. People will come here and say, oh my God, why do I see so much wood going up? And again, we did ask, and Jeff, you guys can talk about this, but it was Mercury who said, we don't care if your frame is wood because it's ultimately how you finish the house. We had someone here a couple of days ago who was saying, and we hear this in some of the community meetings that we hold, but someone was saying, the materials we use really don't matter because this was a 2-day fire event and there wouldn't have been any material that would have held up to 2 days worth of fire. So it really doesn't matter what materials we use. I assume that that's not true, right? Had we used materials that didn't catch the embers and catch on fire, we potentially would not have had a 2-day fire event. So, before we close, can you guys please talk about materials, the closed sort of envelope of a home, how embers react to homes that don't have eaves, don't have combustible material on the outside, maybe don't have vegetation within 5 feet. Can you talk about whether all of these narratives that we're now hearing about are real and they translate into risk mitigation, or if we're just, talking about nothing and the next time a wildfire comes through, we're going to burn for 2 days? Heather, you can take it away.
Yeah, I would agree with you. It probably wouldn't have been 2 days. Fire needs to ignite, and if it doesn't ignite, then it dies, right? And especially when there's also the ability to have, folks fighting the fire. They could have been more effective probably fighting the fire if less things were on fire, right? And so, as they mentioned, the embers were a big issue. And, often wildfires can move very fast. And so if they do move fast through land, then really it's the embers that stay and ignite and really make the fire powerful. So
embers didn't find eaves to get into or windows that they could shatter and get in and start burning homes. Would it stand to reason that less would have burned, I guess, is essentially the question. Jeff or Alan, anything from the insurer's point of view, materials, the finishing of a home, 2 days of wildfire?
I think from our perspective, obviously the IBHS standards are extremely important to us. From a finishing perspective, it's important for us, to make sure that we have the right coverage on the risk as well. So all the different aspects that you use to build your home that we've seen in a couple of these chats, factors in not just to the insurability, but also to, the coverage A and the value of the home as well. So it's all extremely important for us.
Patrick, anything on ember, right? Risk?
So structures put off more ember. And so to the point earlier, the 13-foot chaparrals, kind of, just north of the Palisades put off a tremendous amount of ember. But fire doesn't roll through a community. It generally stops at the vegetation, and then you're exposed to structure. And I can tell you that when a structure does catch, it's going to put off, an enormous volume of ember, much more so than the surrounding vegetation. And so I will say, like, our focus is really focused on that envelope. And you made a point about the glass. If the glass shatters and the fire comes into the home, you could have done all the hardening and not had combustible material externally, but you have to look at the weakest link. And so all of the materials matter. And what you're really trying to do is guard against ember.
Okay. And so to that point, as we go to the state and we talk about policies that would help us be more fire resilient, it sounds like asking them to clear their own brushland, just to really invest that money in clearing their own brushland, sounds like another essential part of making our entire community insurable versus just hardening homes.
Absolutely.
Okay. All right. I think it's the last question and we're doing great with time. So why are customers insured? Why are customers or people who are insured, hampered in trying to shop around for coverage, i.e. builder's risk policy, when as soon as one broker goes to a particular surplus carrier, any other broker also trying to help that same customer is then blocked or held. I think you were talking about that, Heather. Is that true? If they see?
So different carriers don't block. And then just in general, if an underwriter sees the risk multiple times, it can be unattractive to them, right? Especially if they're getting different information. The information might be more complete from one to the other, but then the underwriter is sitting there going, well, which one is correct? Do they have this or don't they have this, right? So they're potentially looking at two different sets of information. So that's part of the issue. So my suggestion, again, would be, you commit to a broker that you feel comfortable with because they have the resources and their style is consultative, like a Venbrook, like Christina. And, then if you don't have success, if you want to follow up with somebody else after you have the results, then that makes sense because you're not approaching at the same time.
Okay, great. Anybody else on that? No. All right. Well, then I thank you all for joining. Christina from Venbrook, thank you. Jeff and Alan from AAA, thank you for joining us. Heather Posner from Burns and Wilcox, Patrick Blandford from Green Shield Risk, and Dan Fogelson, as well as Remington from Sonic Fire Tech. Thank you all for joining us and answering all of our questions. I will put out to the community a link to this recording, as well as a recap of the call. And again, I thank you all.
Thank you, Maryam. Thank you,
Thank
everyone.
Thank you, Maryam. Thank you all.
Thank you.
Take care.
Yes, come to our recovery workspace. I think there was a question in the chat. So it's 15233 La Cruz Drive, and it's generally open during the day. No particular hours, but at least a couple of people in these squares are here now. So roughly 10 to 6.
Thank you, Maryam. Right next to the post office.
Exactly. Right next to Garden Cafe.
That's right. Cool. Thank you.
Thank you, Maryam.
Bye.
Hello. Lovely to see you. Thank you all for being here. I hope this series has been productive. And we'll do another series, but hopefully this has been rich with information.
Yep.
Thank you so much.
Yeah,
you.
thank you for having us.
My pleasure.